Welcome to Total Money Management. We're back with a younger version of Steve today. I just wanted to say, Craig, thank you for coming in. For listeners, we've been trying to convince Steve to have a bit of a cryptocurrency look on things over the last few years, and we finally managed to get him in and got the tick of approval. And we thought we'd invite what I would explain or kind of tell someone is the gold nugget in the crypto sphere. In a universe that's shrouded with scams and nonsense. Craig, you do such a good job explaining what you do and helping people in the crypto sphere. So I'll hand over to you and just say thank you for being here and
want to introduce yourself?
Introduce yourself.
Yeah, sure. Well, thank you very much for having me, and thank you for that wonderful introduction. So I have been trading for 20 plus years now, which makes me sound really old, but I did start young.
You're still young, mate.
I'm still young. So I traded bonds, stocks, commodities, foreign exchange, equities. You name it, I traded it. I was introduced to Bitcoin in 2013, and I went, you can keep your silly little internet money there, broski. Like, I'm not interested in that.
Yeah.
That looks stupid. Piss off.
Yeah. I'm going to lose all my money here.
The reason for that was that there was no liquidity. You used to have to go use local Bitcoins. You'd go and meet someone in person, and you'd do a transaction. It was a really strange, old school method back then.
Yeah.
And I was just like, I trade foreign exchange. Like, this is we're trading.
Yeah.
But it's not the way that I trade. So I said, leave it be. And people go, oh, well, aren't you devastated that you didn't buy? I'm like, no, if I did buy, I probably would have sold it and I would have broken one of my rules. So I probably wouldn't be any better. I'd be much, much worse for breaking my rules. So anyway, fast forward to 2017.
Yep.
I had an old mentor of mine sort of tap me on the shoulder and go, Cobby, you got to have a look at this crypto thing. Yeah. What is it? I've heard of it before. Mining or something. He's like, no. Just trust me. Have a look. So I had a look, and I went, oh, okay. There was actually some charts now. I was like, oh, I read charts. Let's have a look. Looked a bit further. I'm like, oh, there's this thing called BitMEX, which is the worst trading platform.
Oh, yeah.
It used to be the best, though.
Yeah, it used to be the only one with leverage.
Yeah.
And they still haven't changed a goddamn thing. That's how innovative the industry's been on their behalf. Anyway, so I got into trading Bitcoin, and at that stage it was basically Bitcoin, Ethereum that had liquidity, mostly just Bitcoin for futures anyway.
Yeah. And
got bit by the bug and did really well in 2017 despite getting in July.
Yeah, halfway through.
So I was sort of halfway through. I think it started at, I think it pushed through 1,000 and it came back down. Then it ripped on again up to 20,000. So it was a really good run. I was selling at sort of 15. No, I sold at 12.5, 15.5, 18.5. And I remember being on Twitter, well, X, formerly known as Twitter, and I had a big following. Sorry, I had a following, not a big following at all. I had a following from just I'd been on there since 2009, just putting my trading ideas up. Yeah. And they got this new crypto bros that are there, and I'm like, oh, I'm going to buy it 3,000 when it's at 5,800. Like, you're an idiot. Stay in your lane. Stay in FX, you stupid man. It goes, zip, bang, hits 3,000, goes to 2,990, fills all my orders, straight back up, and then they all went very quiet after that.
Yeah.
I worked out that the crypto was exactly the same as any other market. It was just like, where the S&P 500 is kind of like a 70-year-old man who's been around a long time. Very reliable.
Yeah.
Very reliable. Yeah. Crypto was kind of like a toddler. When they smile at you, it's beautiful and wonderful and it lights you up and you're so happy. And then when they have a tantrum, it's like, oh, put that back in the box. It's a very volatile market, a very emotional market. Well, it's a great market.
Was it the volatility that drew you to it, do you think, initially?
Absolutely.
7 days, 24 hours a day.
Yeah, it was. For a trader, the thing that made me stick around, and I really haven't traded anything else since I got into crypto. And I'll explain why. If I'm risking, say, $1,000 on a trade, so between my entry price and my stop loss, if I risk $1,000, right, then that $1,000 is the same if I'm trading sterling against the yen or Apple or Google or whatever, right? It's the same as if I'm trading Bitcoin or any futures contract on crypto. The difference is if I'm trading, say, sterling against the yen, if I get a 3% move, on a low time frame, because you're not going to get 3% move on a daily time frame, not for a while, it would be a big move. Whereas that same $1,000 in FX, so let's say $3,000, I got 3 times my risk because I moved 3 times the size.
Yep.
Get $3,000 profit. Great. In crypto, same period, I could get $30,000. So it's like
with the same rules, same strategies,
same everything, man.
Yeah.
Same everything. So it's a business proposition to someone who knows how to trade. It's like, hang on a sec, less trades, less accounting, less management, and way more money.
it's
more money
and
more time.
Yeah.
I don't have, and it's not like, I can't trade in the weekend.
Yeah.
I typically don't because I just don't really.
You have a life.
Having a life.
Yeah.
But it just meant less trading, more money, and more time to do the things I love. So I was like, you can keep your FX and your commodities and your stocks. I don't need any of that when I've got this.
Yeah,
And it's been very good.
So they're amazingly positive, and like Tom and I are also, we love crypto. So there's no pushback here from us. But one of the principles that we teach is in our 8 principles is risk.
Yeah.
And obviously the cryptocurrency space and Bitcoin probably a little bit less so now, but back then had a lot of risk to it. Exchanges were turning off. People were losing money. So what?
FTX.
Yeah, let's not talk about FTX.
Yeah. I lost millions there.
Yeah. Oh, did you?
Yeah.
Wow. Well, we lost a bit, but not that.
No,
that
not
much.
even close. It doesn't sound like we lost
Anything.
really
Yeah.
in relation to that.
If I get it back, great. But
Yeah.
we're still waiting on that.
Oh, well, let's talk about risk because we've got to learn lessons and we've got to learn them early if we want to sit in a volatile space. So, what are some lessons that you learned either from the old forex space or the crypto space?
Look, it doesn't matter whether it's property or stocks or crypto. You have to understand risk, and risk comes in many different shapes and sizes. The way I describe risk is it's like if you're trading or investing for a living, then your capital is your business.
Yeah.
Right? That is your business. That is how you make your living, is by increasing that capital. So if you don't have any capital, you don't have a business. So you need to manage what you've got first. Kind of like if you're a trader with no capital, you're like a car salesman with no cars. You're just standing on top of a concrete slab. No one's visiting. You have no business. If you're a trader or an investor with no capital, has nothing. So to understand risk is the first thing you have to do. And a lot of people just pay lip service to it. Oh, we've got to manage our risk. Yep. It comes in many different forms. In crypto, not just exclusive to crypto, but more so in crypto, for the trading side of it, there's a couple of areas of risk. There's your counterparty risk, which is your exchange risk. So we talked about FTX just a moment ago.
Yep.
That took a business away from me. It took a lot of money away from me. When you think you can't be put on your ass again, that came and did that to me, which sucked.
Yeah.
I didn't lose everything, but it was a lot.
Yeah.
It was very painful. So I had to accept another lesson, which is the counterparty risk is real. And you can never be in the place where you think, oh, no, this company's fine. I'm safe here. No. When it comes to wherever you hold your capital, which is obviously that is your business, have as little on that platform as possible. Now that leans into, okay, well, how do I do that? Well, you buy on the platform and you hold in cold storage. That's one way for an investor that just holds.
And you use leverage on the platform, something like that.
So to invest in crypto, buy on the exchange, boof, off onto your Trezor or whatever it is, your cold storage, right?
Yeah.
That you're safe there. That's for an investing. For trading, you're going to have to use, well, you don't have to, but I use margin.
Yeah.
And the reason I use margin, and a lot of people get the knickers in a knot about margin. Oh, it's really bad. It's like, no. It's not bad. You just don't understand it.
Yeah, you're still risking 1% or whatever it
Still
is.
the same stuff. But it's actually by responsibly using margin, you are significantly reducing your counterparty risk. So let's say I have, 50,000 USDT sitting on said exchange for trading, purposes, yeah?
Yep.
But I'm trading off of $500,000, right? So each trade, I'm risking 1% of that. We're looking at $5,000 per trade. So I don't need to have $500,000 sitting on the exchange because I'm going to use margin. If I use 10x margin, well, that 50 grand still goes to be the same buying power as 500,000. but 450,000 is sitting in Bitcoin or whatever it needs to be sitting in cold storage.
Yeah.
So my actual risk is 50 G's on the platform. By the very use of margin, we can reduce our counterparty risk. But, and this is the big, big, big but, people blow out with margin all the time. And it's because they jump into, they've got their P's and now they're sitting in, Piastri's car on the circuit. Yeah. They've never sat in an F1 car. They can't get the thing to work. And if they do, they're going straight into the wall. Yeah. Everyone wants the glory without doing the work. And margin is a risk mitigation tool when it's used correctly. It is the best thing for reducing your risk, but you've got to understand it. So your counterparty risk, which is your exchange, then you've got to manage your own financial risk per trade, so 1% risk per trade. That's how I do it. I teach how to have parachutes as well. I call them parachutes. So let's say I'm down 2% in a day, ripcord gets pulled, I'm out. Yeah, I don't care, I'm gone.
Come back next time.
Come back tomorrow, right? If I'm 3% down in a week, I'm out. I'm
Take
gone.
a breather, go fishing or something.
Yeah. So in normal business, it's like, oh, something's not working. Work harder.
Yeah.
Let's get more into it. In trading, it's the opposite. Oh, geez, I'm a bit crap at the moment. Leave. Because usually
don't overtrade.
That's right. Yeah. Usually the metric is this. It's you. That's the thing that shifts and changes so frequently. It's your own self. Get yourself out of your ego. Get yourself out of your emotions. Go for a walk on the goddamn beach. Go shoot your guns. Go fishing. Play golf. I don't know. Whatever it is that you do, go and do the thing that you love. Reset. Come back and ground yourself. Then go again. So you got the risk per trade. You got the counterparty risk, but the biggest one is self.
Psychological risk.
It's psychological. Yeah, and having a systemized approach that tries to eradicate as much of that. When people go, oh, I think this. Oh, I think it's going to do this, or I think it's going to do that, or oh, my gut told me that. Your gut's there for digesting food, ladies and gentlemen, and it's very good at it. You'll find. Yeah. It's not very good at stock picks.
No. Well, I know for us, when we first got into cryptocurrency, 2017, similar time, we'd make 5 or 10 grand in a week and go, "Fuck, we're geniuses. We are geniuses, and we're going to be retired by 23." And
then you give it back.
And then next minute, we've got no money left, and we're like, Jesus, but we didn't have a plan. We didn't, at the time, didn't have a strategy. No exit plan. It was always double down, 50x, 75x, and next minute you've blown out the water. So we had to learn those lessons, I guess.
100%.
Really early.
And I think it's a really important point, right? Because obviously we're trying to get special guests on. We've got Craig here talking to us, who's a day trader or a trader, which is obviously much higher frequency than a lot of the style that we do when we invest. But I think it's important, like it's a slow burn to start with, right? If you don't have a lot of capital. When we started young and, we did your program, thoroughly enjoyed it. The problem is we only had a few $1,000s when we started. And it's like, we're, getting, 1% might be $30 risk. Yeah. And it's like a win, 1.5 risk to rewards is like $45 win. Yeah. And you're like, you've done your 10 charts every day, blah, blah, blah. End of the week, it's like, I'm up $100. Like, dude, and that's when you get tempted to go, maybe we should risk 5% of the account.
Yeah, exactly.
Just while we get started, then we can taper it back. It's like not how it works, bro. Get good now, and if you can do this consistently for 5 years, then you might be in a position where 1%'s 1,000, and a trade's doing a week's wage and this and that. But I think it is a slow burn. And you go on the internet and you see YouTube, Facebook, everything, and you're seeing people post like face melting gains. And you just know that the risk management isn't there. Like, that 23-year-old trader in the States, if he's made $500,000 on this trade, like I'm telling you, like he's obviously used leverage. He can't have been risking 1%. Yeah. Like,
no. And he's probably given back heaps more before that one, and he's only showing you that one.
Oh, it's the gambler's ego, right?
Absolutely.
You're in the
casino.
casino.
Winners.
Yeah, you talk about the winners, and I mean, my family, they love the cash, and they're always in there, and I'll get photos every 2 weeks from them. Go, oh, look at this, I've won $10,000, and they've put $20,000 in. You never get that photo.
Yeah, exactly.
I'd be curious, and without giving away trade secrets, obviously, how's your trading style adapted, Craig? Because it wouldn't have started 25 years ago where it is now. No. So how have you kind of developed and honed that?
Oh, mate, I've taken things away like you wouldn't believe. I mean, even my hair. It is like that. Like when I started, I was, it's kind of like flashy thing syndrome. Oh, there's a flashy thing here. Oh, I'll try that. Oh, I'll try that. Oh, this person's telling me this indicator. This person's telling me that.
trend
before
lines.
you know it, you've got 350 things in the chart. You can't see the price anymore, and you're going, what's going on? So I started with a whole bunch of nonsense, like just about everybody. And I started the same as you, with a small amount.
Yeah.
I'm the product of sticking with it. But I've taken things away. And the thing that I've taken away heaps of stuff. But like, I'll give you an example. I can tell you right now, on my charts, I have a 10-period exponential moving average. I have a 20-period exponential moving average. And I have the MACD, which stands for moving average convergence divergence.
Yep.
I don't have the MACD histogram. I don't have the MACD signal line. Anyone that trades will know what I'm talking about there. Yep. I've just got 3 lines. That's it. Because at the end of the day, what can we do? Well, in a market, you can buy or you can sell. That's it. That's it. So therefore, what's the most accurate and fair, true representation of price and time? Well, it is price and time, which is your candlesticks or your bar charts or however you read it. So the most real representation of what's happened is price measured by time. They're your candlesticks. So candlesticks come together and they start to form trends, and you see patterns forming in there. Bottom line is, though, if you're a buyer or a seller, you want to know what the buyers and sellers are doing. What we're trying to do is we're trying to find patterns to predict future movements. Having too much shit on your charts gives you analysis paralysis.
Yeah.
Because you're looking at it and you're going, it could do, no. If you got to sit there and look at a chart. The way I do things, I'll scan the market in the morning in my Discord group, and I'll go to them, here are the 6 charts that are fantastic out of like 500 or so. Right? Here are the ones that we like. It's on the 12-hour today because this is the time frame that represents the trend the best. So I'm always looking for the time frame that represents the trend the best. That's
so
a big
you
one.
go down from like weekly, daily, 12-hour?
Usually daily.
Yeah.
Daily. I'll have a daily on the bottom, a 4-hour on the top, and with those 2 time frames, I've been doing this a long time.
You'll know.
I know what the weekly looks like, and I can jump to the weekly to show people. On the 4-hour, I can also jump down to the 1-hour, kind of knowing what it's going to look like, and I do this daily so people can learn how to do it.
Yeah.
But it's a process. Most of the time, I'm not clicking trades. Most of the time, I'm going, okay, do the scan in the morning. That's what I'm going to look at today. All right, so if it's a 12-hour time frame, sweet, I'm out of here because it's only the next candle closes at 10 p.m. They open at 10 a.m. The next one closes at 10 p.m. Well, guess what? If it's not setting up then, I'm going to bed because the next one is at 10 a.m. the next day.
Yeah.
So you get to plan your day around the time frame that you're trading, and you wait. You're just setting it up, and I work from a checklist, right? So if it gets onto a watch list, which means I'm watching this actively for a trade, I know it's met probably the first 3 or 4 criteria. Now I'm just waiting for the next few. Most of trading is doing absolutely nothing.
Yeah.
And that's why you've got to get some great hobbies. Because if you sit there staring at a chart for too long, you will find trades. Remember those Magic Eye books?
Yes.
Yeah.
Well, you're probably a bit young for those things, aren't you?
No.
I know what you're talking about.
We're not as young as you think.
But you stare at this chart, you go cross-eyed, and all of a sudden a tiger jumps out at you. It's the same with charts. If you go through and you look at the market and go, oh, okay, that's my list. Maybe I missed something.
Yeah.
Guarantee you'll find something that you missed. Because you're already talking the subconscious into finding something. Now you're going to take a shitty trade you shouldn't have taken in the first place. So it's about patience and process.
Honestly, that's what we noticed when we started, because you look at a chart and you go, oh, that might be a Head and Shoulders. Oh, look at Fibonacci. It's, the golden ratio, blah, blah, blah. Oh, convergence, divergence, blah, 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 blah. And then when we did your program, it's like, does it meet these criteria? Move on. Does it meet these criteria? Move on. And it's just like actually refreshing. And this is a lot of the stuff Steve has slowly drummed into us with investing. Like, look for all the reasons why you shouldn't do this. Yeah. And, if it meets the checklist, then you're doing it. Yeah. And like removing the subjectivity is just, I know everyone's got different personality types. He deals with it better than me. I need to be objective. You know what I mean?
I tell Tom what to
trade. I always had trouble taking profit, right? Because I'd go, what if it keeps going?
Yeah. The what ifs.
Yeah. So that's why like systematic so important, and that's I thought there's a good alignment with what you do, and what you talk about as well.
There's not too like if you read about, I'm sure you both do. Look at this or listen to podcasts. You look at successful people in business because what I do is I trade. It's just a business. It's a wonderful business because it's just all me. I don't have to have 55 staff to make 55 staff worth of money, right? In a traditional business. That's one of the things I love about it. That's also the negative. It's always my fault.
Yeah.
But if as a CEO,
it's
always your fault
it's a
anyway.
lonely game as well.
That's why I've got this Discord. That's why I bring people with me. I don't need to. It's like it's the business side of it for me, and in terms of the education side, it's not. I'm not trying to build a big multi-million-dollar business here. It's I like being held accountable by showing them what I'm doing. It keeps me true to what I have to do because I'll show them what I'm trading, and they know if I've done well or not. They know if I've broken a rule. They know if I'm on a good stretch or if I'm not. It's a beautiful little mirror. It's not me looking directly back at me because I can bullshit myself.
Yeah.
It's them, my people, so to speak, that I'm trying to help to step up to them, be at that level. They call bullshit.
Yeah.
And I need that. I like that. It's
that's a sign of a good community as
it's
well.
a great, and because they don't, like, it doesn't cost, like, people will pay money to do my course, then they don't pay for the Discord. There's no subscription service there.
Yeah.
I don't ask for a fee because, well, generally, if the weather's good on Tuesday, I'm going fishing.
Yeah.
You know, if somebody's paying me, I feel like, oh God, I've got to be there because they're paying me. Well, don't pay me and let me live my life, and I'll be there when I'm there, and we'll work together.
Yeah.
And
Transparency.
it's just so much more enjoyable that way.
Yeah.
But systemized things, coming back to the every business will have generally a fairly clear systematic approach, and then you've got your the staff that will come into that blend, I suppose, and be as good as they can be within a systemized approach. Not many businesses these days, really ever, just wing it. You've got to have a systematic approach. So why on earth would trading be any different? Well, it's not.
Especially when we were talking before we turned the cameras on, 90% of any market is run by computers anyway, right?
Correct.
So that's a system, that's a code.
Absolutely.
So if we can mimic that or replicate that with whether it's cryptocurrency or traditional stocks or whatever it is, it will work because most of the market is doing that. Right?
And you're giving yourself time to learn too. So that's the other thing is, people. I got interviewed by Cointelegraph last week about what was it moon star signs and lunar blah 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 and markets, and they were sort of expecting me to pull out a machine gun and just blow the thing apart, and I was like, if it's working for somebody, like,
is it replicatable? Like, is it?
They're like, well, it happens in cycles. I'm like, you speaking my language? Like, you want me to do a hit piece on this? I'm like, to be honest with you, anyone who's got a strategy is going to do better than someone who doesn't have a strategy. I don't care if it's about reading tea leaves. If they've got a systematic approach and they're going to approach the market the same every single time, the data that they're going to receive back is going to be reflective of what happens. Then they can actually work back from that and go, I'm seeing patterns that have nothing to do with tea leaves, but it's got to do with this, and they can start to move forward. If you're just, out there watching every single YouTube video under the sun, YouTube's great, don't get me wrong, but how are you going to become good at something when you don't know what good at something looks like?
Yeah.
All you do is get bombarded with information, and there's just so many charlatans.
Well, I mean, you said something, and it was kind of an off the cuff thing when we first started. You had a mentor. I think that's so important. Yeah. We've got a mentor, which is Steve, and having someone that you can look at and go and ask the obvious questions that can give you an obvious answer. That's arguably one of the main things to actually level up, and then you can understand what works and what doesn't, right?
Yeah, well, mentors are, if you don't know the answer to the question, make sure you've got someone who does. Otherwise, what are you going to do?
Yeah.
Well, you're going to learn, but are you going to learn it the hard way, or are you going to be able to listen to somebody?
Yeah, so learn from their mistakes.
Yeah, exactly. That's the whole point of it.
Yep. It's so easy to backtest things these days with AI, ChatGPT. You can just whack a code in, right, and you get the answer.
Backtesting for trading is really, really great, but it's also, again, fraught with danger. Because what you might get is a binary cross and zero. Oh, look, this is therefore this is fantastic. Yeah, but you're going to be there, little Johnny, to take every single one of them. How are you feeling? And what is going on? There's a lot more to it. If you're discretionary trading, which is what I do, people go, why don't you write a bot? I've operated with bots on the TF, which is the Russell Mini Futures contract in the US. It made great money, but it failed 7 out of 10 times at a 70-30 win-loss ratio.
Yeah, it messes with your head.
Absolutely. I would be up every quarter. But if you'd been going through, I would discretionary trade as well. I'd go and make sure the orders were, okay, cool, that's work, go to bed. Then I get up the next morning. If I'd been on if I'd had 5 in a row where it'd been like stop out, stop out, stop out, even though it's a totally separate, different part of the business of trading for me, I would still be like looking at my discreet, like there's a trade. Oh yeah, but the Russell's lost 4 times this week. It's got nothing to do with that. It's nothing. It's like selling coffee and a milkshake. They're not. That's a really bad idea.
We're getting it. Yeah, we've sent him on a tangent. It's not just Steve. We trigger everyone. I want to talk about misconceptions. So cryptocurrency, like I said earlier, cryptocurrency is quite a scary space for someone that is not involved in it, or wanting to. And you hear some really shitty stories about people losing money or FTX and things like that. So what are some kind of education and misconceptions that you've seen that aren't quite true, I think, about Bitcoin? And, people kind of go, oh, it's the digital gold.
Yeah.
And the argument pro or against is kind of moot because what you're trying to do is just trade it every day. But do you hold a larger portfolio of it? And do you believe in it? Are you a maximalist?
Absolutely. No, I'm not a maxi. God damn it. It's weird people.
So there's no lines in the sand where you go, I'm moving to cash if this happens?
Oh, absolutely. Yeah. I play the market. Like, I look at, so I love the ideas of Bitcoin and all the power of the people, all of that. Like I'm big. I'm really, really big on that.
Sorry.
I'm not huge on governments and the excessive control and excuse me, government, can I please fart today? Yes, you may. There you go. There's your green hat. Like I'm tired of the overreach of government. I really am. So Bitcoin for me is a wonderful, utopian option. But to me, freedom, well, it comes with not having any worries. And I would like to not have to think about what everyone else is having to deal with, and that requires me to have some money. Now, when the market's strong, I'll be in Bitcoin and a whole bunch of other projects as well, because for me, I'm investing in that ecosystem. Yep. Now, I'm very well aware that a lot of the things that I invest in within a cycle might not be around next cycle.
Yep.
But I'm also very well aware that the only purpose for me getting in and getting out of those is to have enough, or to have more capital to then either buy more Bitcoin or to go, you know what, I'm going to buy a house with 20 acres and 3 cows, and that's me, I'm out. You know what I mean?
Yeah.
So it gives me options. I'm not one of these people that will just, I'll hold Bitcoin through everything. I don't have anything against those people. They don't have my skill set either. I'm pretty good with trends. I've been very good at selling. I don't try and sell the top and buy the bottom. That's the other thing.
Yeah.
I've made a living on the chunk in the middle. I'm not a glory. I don't care if I didn't buy the bottom. I don't care if I didn't sell the top. I just want that chunk again and again and again and again and again and again and again. That's where you make your money. Glory, someone else can have the glory. I don't give 2 hoots about that. But I will move from one to the other. I will move in and out of Bitcoin. At the moment, I've been holding, I bought in August 2023 was when I was buying Bitcoin again. And my portfolio, for obvious reasons, here in Australia with the CGT, all that. I got a hold for more than 12 months.
Yep.
And I have sold 1 Bitcoin. I sold 1 Bitcoin for this cycle 2 weeks ago because my first target was met at 120,000 US.
Yeah.
I still hold all the others.
Yeah.
And I will be scaling out, I think, at 148, hopefully higher than that. I'll probably sell a bit at 148, depending on what's happening at the time, because I'll scale out my investments the same as I scale out of my positions trading.
Yeah. Okay. Interesting. So with your long-term stuff, you've got price targets. Yeah. Okay. Because we take a different approach. Learned a lot from you initially, and Steve. We've got a moving average, which is kind of our line in the sand with that stuff. We want to trade the momentum above, but it's also our point where we go. Yeah. But
at the end of the day, you've got a plan. Good. Yeah. Good. It means that there will be a point at which you exit.
Yeah.
Yeah.
You do not want to be a bag holder.
Yeah. Reap the rewards when you can.
We'll buy a bigger bag next time it goes back.
Exactly.
I'm the same as you, Craig. Like it's a vessel for me. It's at the minute you can't buy a house with 20 acres and a couple of cows with Bitcoin, or you can, but you got to find the right one, right? So it's a vessel. I want the cash. I want to go and live life and be, dare I say it, financially free. It's a trending word, but yeah, it's you investing in cryptocurrency and the volatility allows me to go, okay, at this point in time, I can go and buy the house with 20 acres and a couple of cows, and that's going to be the vessel to do it. And I don't care if it's Bitcoin or cash or art. It's just a...
At the end of the day, the beautiful thing is that we can exchange our Bitcoin for Australian dollars. My dad says, but you've got that much money? But how do you change it? I'm like, Dad, for the last 8 years, I've been saying the same thing. They own half a Bitcoin because I gave them half a Bitcoin. I'm like, you just need some.
Yeah.
Like, one day it's going to be mine anyway. Just there you go. Don't sell it. Put it in the safe. Done, right? And I'm like, maybe we should sell it now. I'm like, yeah, you don't know how.
Stick it in the computer.
My gift to you, it stays there. But for crypto, blockchain, I think that we're going to see a maturing after this phase. So I still think we're in the era where we'll see pets.com be worth $1 billion. And that's like a meme coin having a market cap of $1 billion.
You like Doge.
It's stupid. It's stupid. It's annoying.
Like, we were talking about NVIDIA's $4.4 trillion market cap.
They are the single biggest liquidity extraction device on the market. Hundreds of billions of dollars has been extracted because they pump them. The real money goes in to buy it, and then it's worth nothing.
Yeah.
That extracted so much capital from that first phase about March last year when the market started moving and the meme coins went nuts. It was just the worst thing for our industry was pump.fun, which is a meme coin. You know, you guys know what that is.
Yeah.
Worst thing for the industry possible.
Just because of the exposure that allowed other people into corporations.
It just ripped hundreds of billions of dollars of real money away from real projects that are doing real things because of just gambling.
Yeah.
But coming back to what I was saying, I think we're going to see a maturity. I think a lot of these projects are going to absolutely...
like the .com bubble.
Pets.com was $1 billion business. You know, what did it do? Nothing. But there was hype surrounding it. I look forward to the maturity. I hope that when the maturity comes, I'm already gone.
Yeah.
You know, I'm 41 years old. As far as I'm concerned, I've worked enough. I can just hear the boomers like, lazy bloody millennials.
With their 20 properties in the background.
No, I'll still keep working. But my point being is that it can be stressful being in this industry. But name one that's going to potentially have the same sort of returns as what this does, and tell me it's easy. Like, nothing worth having is easy. This is a great opportunity for people. I actually am excited about the upside. I'm equally as excited about the downside. I think I'm going to make more money on the way down than I will on the way up, because I think that there's going to be projects that absolutely shit the bed, and I'm going to be riding those like an absolute drunk cowboy on the way down.
So do you look at? Are you just in the top 10 market cap, or are you looking at everything?
No, I'm looking. My list I look at now is about 530, and that's futures contracts.
Yeah.
Look, a lot of those I don't know the full liquidity story. So if there's not enough liquidity, you go, mate. If there's not enough liquidity, I will not trade it. But the way I trade is find the trade first. If the trade sets up and it warrants you writing on a piece of paper your entry, your stop loss, your target, and your trade size, when you get to that trade size bit, and it's like, okay, it's 150,000 contracts in such and such.
Yep.
I look at the order book and I go, oh, most orders are going through, there's only 1,200, and then there's a $5,000 order, i.e., there is nowhere near enough liquidity there to fill my order at a specific price point. If I go and hit market buy on that, it's just going to rip up.
Yeah.
And, okay, well, people go, well, why don't you just use a limit order? I could use a limit order. It might take a long time to get filled, but you've got to remember on my stop loss, when I get taken out, it's still going to be a market stop.
Yeah.
So at some point I'm hitting market and I'll slip the crap out of myself, and now my 1% risk becomes 3 because of slippage. So there's generally anything in the top 10, if I can find a trade there, I'm tickled pink. Because I know I don't even have to think. I'll just raise the order as big as I want, and I'm going to get filled. So,
well, Total 2 and Total 3 look like they're going to break out and just hit new highs imminently. I've never wanted to create FOMO or anything like that, but we're at a time in the market right now where it could be quite fun for the next few months.
Yeah, this week I've been commentating a lot about that for a while, and it's just simple trend. It's just simple trend. But this week was dominated by Tuesday was CPI, so that came out and it was better than expected.
Yep.
So therefore, that ticks everyone over into we're going to see interest rate cuts in the US in September. Yes, market moves. Bitcoin goes to all-time highs. Then it goes PPI comes out Thursday night. Bah! Market falls back down, and everyone's going, what about interest rates now? And they got it so so wrong.
So wrong. It was like 3 points something, wasn't it?
They were like 40% off. Yeah. Like just miles.
That's economists, mate. They're never right.
Are they ever right? It's like a weatherman.
That's why I said you can't trade on news. They're like, I buy it when it does. I'm like, no, you don't. And if you do, you don't get it right.
Too late. Yeah.
You can't. If a consensus of the smartest brains in economics from the biggest investment banks and whatnot around the world, handpicked to be a part of that survey that gives you the prediction, if they can't get it right, what chance have you got?
Yeah.
Leave it alone, Barry. Leave it alone. It's not going to help. Just know when it comes and stay away from those big news announcements, and you'll be better off.
Yeah, that's sound
advice. Good point. Yeah.
Do you have anything else to ask Mr. Cobb?
Oh, look, I was just going to say, for anyone looking to start out, like we get a lot of people right on the podcast asking about crypto. It's not something we focus on. We obviously talk about it because Jacob and I we hold some Bitcoin.
Yep.
Where would you start? Would you say learn about your risk, which is in line with what we talk about, or
It's a really good question. Where do you start? There's a place called Pocket University that covers the very basic stuff, like how to buy, what is a wallet, how to use an exchange, that sort of stuff. Pocket University is really good because it's that entry level in. No matter whether you want to trade or you want to invest properly, you're going to need to know how to read a market. That's where I come in. TheGrowMeCo.com free newsletter. Watch that, learn that. Go on my YouTube, The Grow Me Co. That is Grow Me, as in growing a tree, me, co.
Have you had some issues with that? People typing the wrong stuff in?
I think I just forget, when you say things, it just comes rolling out of your mouth and no one else can understand it. So I try and make sure I make a point of it. Yeah. It's a really damn good question. But one thing I would say more important than anything else is don't believe everything. So go into the industry with some fairly huge bullshit radar on.
Yeah.
If anyone tells you it's easy, do not go any further with them. Nothing's easy. Nothing that's worthwhile having is easy. Try and keep things, again, come back to the realities of what things are. Markets go up and down, okay? You can buy and sell. Those are real things. The crypto market is cyclical. Have a look at the Bitcoin halving cycle because markets tend to work to that Bitcoin halving cycle. Now, there's again another conversation around maybe it's not going to be this time, or maybe it's not. But until it proves itself to not work, I'm going to keep with that. Yeah. Have a look at the cyclical nature of Bitcoin because what Bitcoin does, it does eventually roll into your alts. I don't think we're going to see like we did in the last bull run of 2020.
Yep.
2020.
Oh, that was crazy.
Where everything goes up. 17 was the same.
Awesome.
I think we're going to have to be a little bit more switched on.
With an exit strategy.
Yeah, I think that's really.
Well, it speaks our language. I mean, I'm wearing the top today. We use CAPE, cyclically adjusted price earnings ratio, to value markets, right? Because most things cycle, right? So you can have your views on Bitcoin halving. Is it or isn't it going to happen? Is it a thing anymore? But to your point, like CAPE in the last 150 years, until it stops working,
keep using it.
Keep using it.
If it ain't broke, don't fix it.
Yeah.
It's like a hymn sheet. You can go back to your rules, and this is why I'm doing it, and what I'm looking at, and you'll make money and do it.
Look at Buffett. He does the same shit still today that he was doing 755 years ago, and it still works.
Granddad Buffett, right?
So
good on you.
It doesn't mean there's not other ways of doing it, but the guy knows what he's doing because he's got a strategy. He knows what he knows and he sticks to it.
Yep. He's only worth 400 billion, so
is that all?
It might be worth listening to the bloke every now and again.
While he's still breathing.
Yeah, sure. Exactly. Yeah. All right, well, let's wrap it up there. Like Tom said, if you need to find Craig anywhere, you've got a decent Facebook community. People can find you there. Craig Cobb, growmeco.com.
Trader Cobb on X. Cobb
I'm throwing this laptop around everywhere.
Twice, mate.
I'm nervous. But until next time, Craig, thank you so much for coming on.
Thanks for having me, boys.
Appreciate it. Thanks, man.
As always, remember, we don't provide financial advice.